Today is Friday, December 6, 2024. It's 8:11 a.m. Eastern. Welcome back to another daily recap. We're going to start off with levels like we usually do, levels in the SPY that we're going to use to trade against in the E-mini futures. So at 8:30, there is an average, well, there's several data releases, average hourly earnings, the non-farm payroll, and then later there's consumer sentiment index, 10 o'clock. But anyway, 8:30 could be important. It's before the opening bell. Doesn't affect what we're doing here, but just keep an eye on that. I kind of wanted to wait to see what happened after 8:30, but I need to get this done so I can get on with my day. So the levels that I have are kind of spread out. Well, they're not really spread out. They're close together. I just don't have very many. They're within $1. And the light blue line at 606.52 is kind of the axis. They've been trying to get above that. They're kind of in that area. Of course, they were definitely above that yesterday, but if they can stay above that and definitely the levels higher up at 607.66 and so forth, then the bulls are probably still strong enough to push price higher to those areas we talked about above current price in last night's video. However, if they fall, and they could because of timing and a few other factors, then we've got a couple levels to catch price. Essentially just looking for base hit trades of 4 points or so in the E-minis if the SPY hits these levels the right way. After the closing bell, we'll come back to this chart and talk about whatever happened. Catch you on the other side. We're coming back at you the next day. This is Saturday morning. So how did we do yesterday on Friday? The market was more or less flat again on the day, but while price was trying to establish a direction in the morning, they hit two of our levels, and here's how the trades played out. After letting the market settle in for 15 minutes, you would have been ready to go short in the E-minis when the spiders hit 608.79. That's with the 5-cent buffer applied. That's the level identified before the opening bell, minus 5 cents. I do that simply to pull in more trades when there is a chance that front runners will start selling in front of the level, thereby pushing price down before it actually gets to the level. These levels of support and resistance are known to a lot of traders, at least traders who know what they're doing. And since people and algos are different, you're always going to have plenty who like to scale in positions or just trade in front of support and resistance areas. And when enough traders do that, price will react prematurely. I get this question a lot. Why do you adjust the levels like that? Well, that's the simple answer. Moving your trigger point 5 cents toward price will usually be enough to pull in trades that you might sometimes miss because of front runners. So you're in a short position at 608.79 in the E-minis. Everything is looking fine until about 10:07 when they got to a low of 608.43. That is within 10 cents of the base hit profit target. That's the objective of 4 ES points. It quickly reverted back to the entry point. That happened fast enough to where the odds are increased that price might go higher at this point, and the safe thing to do is jump out of the trade at your break even in case they do go higher and leave you hanging. This trading strategy is a process. You have to be willing to treat each level and each trade the same if you want to see consistent results. The Playing by the Rules tracking log, which we'll look at later, shows you what happens when you treat each level the same. Good, solid returns in the long run are possible. But the official trade here was a wash. No points given or taken. The level did work as overhead resistance eventually, and price came down, so staying in the trade longer would have paid off, but we can't count this as a base hit for the Playing by the Rules log for obvious reasons. I will say that when I was in this short position, because I did go short here, I saw a couple things that hinted that price might fall a little lower eventually, so I stayed in the trade longer and I actually pulled 6 points out. We'll look at that live trade later. The next official trade was a long trade at 607.71. Again, there's your 5-cent buffer. This was a classic base hit. It worked as designed, no drama. There's 4 points in the bag with that bounce right there. So now when they get below this level and 20 minutes or more has gone by, this same level is valid for a short trade, but now we're going to adjust it 5 cents toward price on the other side. Remember, the original level was 607.66, so here's 5 cents. So just enough time had gone by. I like to see them take more time before they come back up to retest a level like this, but it wasn't violating any rules. If you went short at 607.61, you would have seen price come to within 10 cents of your base hit profit objective down here before bouncing right back up to the entry point. So again, another near miss of the profit objective. So closing out the trade at the break even was the plan. And in this case, it would have kept you out of trouble because when price got back above this, as they are apt to do in this type of behavior, they would have given you a fumble signal. So jumping out at a wash is definitely better than a fumble where you are guaranteed to give points back to the market. So at this point in the session, you would have traded this level on both sides, and it's out of consideration for future trades for the rest of the session, and no more levels were hit. Never got back up to this 608.79 level. So you would have ended the day with one base hit of 4 ES points if you were treating this as a process. We'll look at the one trade that I took. I'm already in the trade when I started the recording. You can see I'm short 2 contracts. This is before I even had my little clock set up, so that happens right there. So 9:50, 51 or so in the morning. I'm short 2 contracts in the E-minis, looking to get 6 points with one contract and trail the remaining contract down for more points. But as I mentioned earlier, I saw a few things that looked like they might go lower eventually. It was taking more time than I wanted them to take. So I just went ahead and took both contracts off at 6 points. So there's a $600 when they got down there, and gave this time to develop. Move ahead here a little bit to show you. So I just ignored that little near miss signal. In fact, I was willing to sell one more if they got back up to this point. I'm just going to move ahead here until they came down. And then once they did that, I had to be away from my computer starting around 11:30. So I didn't really wanted to take the trade at 607.66 down to that level, but also wanted to be, I didn't want to babysit it. So I ignored that level, and I was kind of away from my computer for a while. Just let this go. So I missed that trade. I didn't trade 607.71. Got back to my computer, just kind of looked at a few things, and I was ready to head out anyway and get a start on my weekend. So nothing else. As you know, they didn't hit any more levels anyway. So no more trades for me, just the one base hit of 6 points with that initial short position. So here's what they look like on the daily chart. Just another day higher slightly, just flat on the day for the most part. And since we ended the week, let's just look at the weekly chart. Talking about several weeks ago after this rally after the election results, the timing was right. If they were to come all the way down and give us a signal, this could be the signal of the beginning of a rollover. That didn't happen, and they're going higher. So they've got a destination higher still, kind of beating a dead horse here because they keep saying the same thing. But you start noticing as we go down in time frames, this is a 4-hour, 3-hour, and so forth. You start seeing a few, just visually here, few things that kind of hint that they might be trying to roll over. I'm not saying they will, because there's still a destination higher up. On this 1-hour chart here, got below this little breakup. I'm not going to get into the details too much of what's going on here, but they've been pretty bullish and even creating some unfilled gaps along the way. And then all of a sudden, they're kind of breaking the low of this little, what would be typically a bullish consolidation. Doesn't really mean a whole lot at this point. We are on a 1-hour chart, but you don't want to ignore the fact that you have some slight divergences of some of these smaller consolidation patterns that don't look like they're playing out correctly so far. Over on the tracking log, the first one is the playing by the rules log, where every level that is put out each morning is treated the same way in this log to show you what is possible. I don't necessarily trade every single one the same way. That's why I have my own Sam's Trades log, which we'll look at in a minute. But today was the 4 points, one base hit, and then level 5 here. You can read it was a wash. That was the first trade of the day. That did work out eventually, and that's where I actually got my 6 points. And then over here on the Sam's Trades log, you can see the one level that I got the 6 points on, and that's pretty much it. So let's filter out. Let's see how we ended on the week. This is the play-in by the rules log, just Monday through Friday. And you can see the total rate of return, the profit and loss, the averages, the totals. Everything is now adjusted to reflect this time period. If you're trading one contract every single level, you would have ended with the week with $1,000 and so forth. Pretty clean numbers. On the Sam's Trades log, yeah, slightly less. I didn't take as many trades. We looked at the month of November in a previous video, but why don't we go ahead and take the entire year to date? This is 2024, play-in by the rules. 1st of January through Friday, yesterday. And here's where you are. If you're treating every single level the same way all year long, and by the way, many of you have had these exact levels since I think it was around March when I started providing these levels to anyone who was interested in receiving them. So this is what's been given to you essentially if you were trading each one. And here's the Sam's Trades log, beginning of January through yesterday. Kind of compare the two. Playing by the rules, Sam's Trades. Hope these numbers make sense. Let's go back to the play-in by the rules log, and I'll run through some of these metrics to show you what they mean. So this total rate of return is, you started the period, in this case, 2024, whatever we're considering. You started with a $50,000 account balance, and you traded 2 contracts at each level the entire time. And this is where you would have ended up with at this point in time. So the 175.5% rate of return, that reflects the 87 750. And we could do that math really fast. So to show how this works, we can say you started with 50,000, you gained 87,750. So there's your total. So what is the formula to determine your total rate of return for any period of time? Let's do it right here. It's the, I need a parentheses here. It's the ending balance, which is right here, minus your starting balance of $50,000, divided by your starting balance. I guess we need an extra parentheses. We're going to multiply the entire thing by 100. And let's close this side. So that should give us 175.5% rate of return for this year so far. That's how that works. So I hope that was helpful. That's what I've got for today and for the week. Thanks for watching and subscribing and following the channel. I'll be back on Monday with new levels and a new game plan. So I'll talk to you in the next recap video. Have a great rest of your day.